Welcome back. If you've been watching the global markets lately, you might be feeling a little bit of whiplash. One minute, it's all about a looming trade war. The next, we're hearing about a massive tech boom. So what is going on? Well, this week, we're going to cut right through all that noise and figure it out. So, here's the big puzzle we're tackling today. You've got a trade war, a potential tech bubble, and a gold rush all happening at the same time. Now, these might seem like totally separate stories, right? But what if I told you they're all connected? It's all part of a much bigger picture, and it starts with just one incredible number. $4,000. That is the new, mind-blowing, all-time high for a single ounce of gold. Now look, when you see a classic safe haven asset like gold just shooting for the moon like this, it's a massive red flag. It tells you that the big money investors are getting nervous, and they are running for cover. They're bracing for something. Okay, so let's get into it. To really understand why investors are so on edge, we need to look at three key tensions that are pulling the market in totally different directions all at once. First up, the big one, the political battlefield. So tension number one is all about the growing economic fight between the world's superpowers. Yep, the threat of a full-blown trade war is officially back on the table, and it is making everybody, and I mean everybody, pretty uneasy. On one side of the ring, you've got the U.S., where Donald Trump is threatening to slap a new 10% tariff on, well, a lot of things, which could potentially wipe out $1.2 trillion from the global economy. And on the other side, you have China responding with a strategy they call dual circulation. Now, what's that? Think of it as China's plan to become way more self-sufficient, boosting their own domestic market and building their own tech so they don't have to rely on anyone else. It's a high-stakes economic standoff, and it's creating absolute chaos for global supply chains. And this brings us to a really sharp insight from Michael Hartnett over at Bank of America. He calls what's happening an unstable rally of everything. And his point is that all this political chaos is exactly why investors are flocking to gold. It's become the ultimate insurance policy against all this volatility. Now let's move on to our second big tension, because this is where things get even trickier. All these geopolitical chess moves, they're basically forcing the hands of the world's central banks. These are the financial guardians, and right now, they're caught in a really tough spot. They're basically just holding their breath. And you can really see the split right here. Over in the US, the Federal Reserve is hitting the brakes. Jerome Powell is signaling, hey, we're going to pause on cutting interest rates because the job market seems to be cooling down. But then you look at China, and the People's Bank of China is doing the exact opposite. They're keeping their foot on the gas, keeping policy loose to try and juice their economy. So you've got the world's two biggest economies pulling in opposite directions. It makes it almost impossible to predict where money is going to flow next. So, politics are a mess, central banks are on totally different pages, which leads us to our third and final tension, a huge, raging debate among the world's smartest investors about where on earth you're supposed to put your money right now. And one of the loudest voices in this debate is Ray Dalio from Bridgewater, and he's sounding a major alarm. He's looking at all the excitement around artificial intelligence and saying, hold on, this thing could see a major correction. We're talking 15 to 20%. His argument is that the government is counting on this tech boom to create growth, but the underlying political problems are just too big to ignore. Now, Dalio's concern is part of this bigger idea called the debasement trade. So simply put, that's when investors get worried that governments are printing way too much money, which makes each dollar or yuan or euro worth less. So what do? They pile into assets that can't just be created out of thin air, things like gold and Bitcoin. And as you can see, both have had a fantastic year. Gold is up over 20%, and Bitcoin has shown some incredible strength. Michael Hartnett at Bank of America, again, takes this even further. He's got some really bold predictions for the next couple of years. He thinks bonds are going to do great. He sees big gains coming from stocks in China and Europe. And get this, he's calling for gold to hit $6,000 by 2026. His main point? You've got to start looking outside of just U.S. stocks. So really, the whole debate kind of boils down to this. On one side, you have the bulls, like investor Peru Saxena, who see us at this incredible turning point for game-changing tech like autonomous driving. But then you have the bears, like Ray Dalio, who are warning that this is all a classic bubble, just fueled by hype and waiting to pop. Okay, so we've got this tangled web of trade wars, central bank drama, and asset bubbles. What in the world does this actually mean for you? How are you supposed to navigate all this craziness?
Well, the biggest takeaway from all this analysis is the need for something we could call a consensus portfolio. The idea here isn't to make one giant risky bet. No, it's about building a smart mix of assets that's designed to weather the storm by balancing that hunt for growth with some real protection.
So, what does a portfolio like that actually look like? Well, here's one idea. It's not about selling all your US stocks, but it is about balancing them. Notice there's a pretty big slice here for China and other emerging markets to capture that global growth. Then you have a solid chunk in bonds for stability. And then you have these dedicated slivers for both the high-risk, high-reward AI story and the classic protectors like gold and commodities to hedge against all the chaos we've been talking about. So look, if you take only one thing away from our entire chat today, please let it be this. In a market that's this fractured and this unpredictable, diversification is not just some boring suggestion from a textbook anymore. It is right now an active strategy for survival. And that leaves us with one last big question to think about. In a world with all these competing forces pulling us every which way, where is the real danger? Is the biggest risk playing it too safe and missing out on all the potential growth? Or is it not being safe enough to handle the shocks that might be just around the corner? The answer to that question is going to define the next chapter for investors everywhere.